Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I'm your host Suraj and we have an action-packed half an hour ahead of us with lots to cover. Now we have three big listings today: Motisons Dwellers, Suraj Estate Developers, and Muthooth Microfin. Now the stocks are expected to be listed in just a few minutes from now, so stay tuned for the latest on that. We will also be joined by two very special guests, Mr. Santosh Meena, Head of Research at Swastika Investmart, and Gaurang Shah, Senior Vice President at Geojit Financial Services. But first, let's take a look at how markets opened this Tuesday morning. Now, Indian markets kicked off the last week of 2023 on a flattish note, with the first stick for Nifty coming in at 21,365 mark. Now, the market have since been choppy, slipping in and out of the green. But then again, we can't make much of these moves and much of this volatility, given that big institutions are on a Christmas and New Year holiday. So the market volumes are expected to be thin for this week. Now, as of 9:30 a.m., as you can see on your screen, Nifty was up about 0.09% at 21,368 mark, whereas the Sensex was down marginally by about 0.03% at 70,087 mark. The broader markets, now they are showing good resilience. Now remember, last week on Wednesday, we saw a big massive decline across the board, and the broader markets were the one that suffered the most, as they were down by about 4% or so. But we have pretty much recovered all that was lost after the Wednesday shakeout. And as you can see, Nifty Mid Cap 100 opened in the green, and it's about up about 0.5% or so at 43,305 sort of levels, whereas the small cap index is also up in the green at up about 0.24% at 14,881 mark. Now I guess the big thing for us to track will be India VIX movement. Now that index has spiked quite significantly. It's up 6.41% this morning, and I'm made to believe it's above 14 sort of levels. So that is something that we'll need to be cautious of going forward. Now with that, let's also bring on board Mr. Santosh Meena, Head of Research at Swastika Investmart. Now Santosh, welcome, good morning. Thank you for joining us here on News9. Now, after this sharp run-up that we saw, since October 26, Nifty has been on about a 7-week winning run. We snapped that last week. Are the markets now turning cautious, given that, the sharp surge we have seen in the past couple of months?
Yes, first of all, good morning. Market, if we talk about the Nifty, then we have entered in a consolidation phase, Nifty and Bank Nifty ahead of year-end vacations. But yes, the overall structure is still bullish. But Nifty has to cross the supply zone of 21,500 to 21,600. Once it will cross this zone, then we can expect this momentum is likely to continue. Otherwise, market may remain sideways, and there will be risk. Then we may again see a dip towards 21,000 level. So for time being, there is a range of 21,000 to 21,500. Once this range will be broken in either side, then the new trend will emerge. But yes, stock specific action will be continued. Today we are seeing a strong buying momentum in the chemical space, pharma names. So during this year-end event, I think the stock specific and sector specific movement will be continued, and the headline indices Nifty, Bank Nifty may see some consolidation.
All right, and specifically on Nifty Bank, now we saw some wild movements in the latter half of the week. The index has now made 7 attempts to cross 48,000 mark, but only has managed to close above it once. Is that a major hurdle for us to surpass to see further upside?
Yes, 48,000 to 48,200 is a critical supply zone. We saw a sharp fall from this zone, but on the lower side, 47,000 acted as a strong support level. Once 48,200 will be taken out on the upside, we can expect a rally towards 48,800 level. Otherwise, the sideways movement will be continued. If it slips below 47,000, then there will be a risk for a fall towards 46,300 level, which was a key breakout level. After that, Bank Nifty saw a massive rally. But yes, for timing, it also may remain best in coming days.
And Santosh, what are you making of this movement in the broader markets? Time and again, even after Wednesday's shakeout, we were talking about, froth building up in the broader markets. But they have at least three times in 2023 alone, they have, pretty much set aside those concerns and have recovered quite fast.
Yes, completely agree. 2023 was all about broader market, and again, after a sharp dip on, I think Tuesday, Wednesday, we are seeing a recovery. I believe I should not use this word NAV prop up, but by the year end, we see some kind of NAV prop up, and the broader market tends to do well because FIs remain absent and domestic money chase individual stocks. So this kind of trend may continue until 31st of December or maybe initial week of January. After that, I think once FIs will come back, the momentum will to be seen in the large cap stocks.
Now, Santosh, shifting focus from the broader markets to sectors and specifically IT stocks. Now, the entire IT pack has been on a roll lately, especially in December. But there is one stock that we need to talk about that has finally woken up after a long slumber, and that is Wipro. Now, the stock is on a 6-week gaining streak. In this time, it has rallied by about 20% or so, and it has also decisively broken above the multi-year consolidation zone. Now, can traders still make money in this counter on the way up? Or, given the kind of run-up that we have seen, are you cautious at this point in time?
Yes, this stock underperformed the entire Nifty IT space despite the good run up in last few days. We saw a massive run on Friday because of some news expectation like a new MD and CEO. But yes, still it is bullish. It is bottoming out. There is a clear base formation. I believe this 440 to 420 level will act as a strong demand zone, and there is probability that we can see a level of 500 520 in coming days. So traders can bet on the long side because downside looks limited and upside is open up to 500 520, even 540 level can be seen on the upside.
All right, another stock I wanted to pick your brains on is TV18. Now that stock is up about 4% this morning, after news came over the weekend that Walt Disney and Reliance Industries have entered into a non-binding agreement for their India operations, and there is a big merger on the cards. Now, what's your opinion on TV18?
Generally, I tend to avoid this kind of stock because of the high volatility, but technical structure is bullish definitely. Because of a strong technical structure, we can see a buying momentum and move towards 70 kind of level. So those are some kind of aggressive traders can make a position in this counter where 48, which is a 20-day moving average, can be your stop loss. On the upside, 64 and 70 rupees should be your target levels.
And Santosh, we are in the last week of 2023, and pretty much around this time, most of the institutions are on their festive holidays to celebrate New Year's and Christmas. So the volumes are generally thin, and market tends to be quite choppy at this during this time around. So what would be your advice for the traders out there? What should they be doing over the next couple of weeks?
Yes, as I said, generally large cap, especially headline indices, may consolidate. So traders should avoid trading in Nifty and Bank Nifty for time being, because you may see some kind of intraday volatility because of the lack of volume. But yes, definitely individual stocks may see momentum because of the year end NAV prop up and some buying. So your focus should be on individual sectors and stocks where you can make good money in over the next few days. So for today's example is chemical stocks, pharma stocks are doing well, some infrastructure stocks are doing well. So your focus should be on individual stocks for next couple of days.
Right. And Santosh, before we let you go, what will be your top 5 short-term trading ideas in this current market?
Yes, as I said, I'm bullish on broader market for time being for at least for a couple of days. So first pick is my Deepak Nitrite, as chemical stocks are showing strong momentum, and we are seeing some value buying in chemical space. If I talk about the Deepak Nitrite, then there is a clear breakout of symmetrical triangle formation on longer time frame. So it is just this start of the move, and we can expect a target of 2600 on immediate basis, where 2300 should be a stop loss. Second is I'm also bullish on mankind, pharma space, and mankind pharma is one of my stock from this pharma space. It is also consolidating above 80, 1850, 1860 level, which is its 15-day moving average. Yes, definitely 2000 say 2000 to 2040 is a supply zone. Once it will cross 2040 level, then we can expect a big move. On immediate basis, 2100 is your target, and 1835 should be a stop loss. Another stock is Minda. If I talk about this, then basic breakout of flag formation is taking support. It's 50-day moving average. We can expect an immediate target of 725, while stop loss should be 645. Another stock is JKIL, J Kumar Infra, but I would say I shared this stock in the morning before market open, and there was a news of CA update. Because of this news, stock has already rallied and touched my target of like 550. But I'm still bullish on this counter despite move of 14% in the morning. The target of CLSA is 700 plus, so I'm also expecting the same target because recently some market investor check in this stock. So you can even enter at current level for the target of 700 plus, but your stop loss should be 500. And the last stock is mine from metal space, National Aluminium. Bullish on metal space for next this quarter, because there is a clear breakout of symmetrical triangle formation in Nifty metal index. So you can buy National Aluminium. Currently, you can keep a stop loss of 110, and the target would be 125.
All right, that's Mr. Santosh Meena for you, sir. Thank you for joining us here on First Take. A very happy New Year to you and to your family and everyone at Swastika Investmart.
Same to you, and same to you to all your viewers.
All right, with that, let's take a short break. On the other side, we'll be joined by Mr. Gaurang Shah of Geojit Financial Services. So stay tuned.
Yes, the scale of the attack surprised us.
When you get a series of alerts, 16 intelligence alerts, if Maharashtra government at that time had alerted the Coast Guard and the Navy, this 2611 would not have happened at all.
And one of the details they had planned was to use these dhagas to mislead the investigative agencies.
All this was to be presented as a Hindu terror. So it was a Pakistan operation. The LAT was the front end.
As the attacks were on, it was clear that they were planned and launched from Pakistani territory.
For all of those victims of terror that was exported from Pakistan over the years, including but not limited to 2611.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Take here on News9, and the markets are quite choppy this morning, you know, slipping in and out of the green. And as of 10 a.m. this morning, you know, Nifty is trading flat with a positive bias. It's up about 0.19%, up about 40 points or so at 21,389 mark. But we have the listing of Muthooth Microfin going on BSE. So just take a look at that. We'll get you the numbers, a listing premium in just a short while from now. But on your screen, you can see the listing of Muthooth Microfin. We also have the listings of Motisons Dwellers on the NSE and Suraj Estate Developers. As you can see, this is Motisons Dwellers that has debuted on NSE and BSE, and we'll get you the numbers just in a moment's time from now. But you know, coming back to the markets, flattish this morning, but you know, the broader markets are holding on to their early morning gains. And again, we need to talk about this recovery that we have seen, you know, since the Wednesday's crash. You know, time again, at least there have been 3 instances where the markets, the broader markets, have corrected by about 3 to 4%, but you know, the recovery has been equally strong, and that has been the case this time around as well. So you know, perhaps the talk of froth is not being bought by market, and you know, we are seeing good recovery. And even among sectors, you know, the IT pack, now that is under some bit of a pressure after, you know, Infosys's 1.5 billion global deal was terminated. Now the stock was down about 2%, and we are seeing some sort of effect play out on other stocks as well, other IT stocks as well. The IT pack is down by about 0.83% this morning. And you know, the banking pack is also flat, but apart from that, most of the indices are trading in the green, and among the leaders are the metal pack, which is up about 0.9% or so, pharma, which continues to, you know, do well ever since the re-emergence of COVID-19, and the auto pack, which is up about 0.5% or so this morning. But with that, let's also bring on board Mr. Gaurang Shah, or Senior Vice President at Geojet Financial Services. Hello, Mr. Shah. Good morning. Always a pleasure to see you. Now, you know, the markets have jumped quite significantly since October 26, and we have been talking about this, you know, pretty much on a week-on-week basis. But last week, we saw some bit of a choppiness set in, and you know, it seems that the market is finally taking cognizance of the fact that we have in fact run up quite significantly, isn't it?
Thank you, Suyash, and morning to all of you. So yes, we have been discussing markets for a while now. Last week also we were discussing markets. Our view was there might be intraday correction or maybe 1 or 2 day correction, and that's what exactly happened. Last week we saw a very marginal correction. If you look at percentage, it was 1.5 on the Nifty, 1.60% on the Sensex, close to about a percentage on the Bank Nifty. So it was hardly anything according to me. I think we have get used to or accustomed to choppiness and volatility. And the fact of the matter is that over the last 50 odd days, that is from 2nd of November onwards, we have scaled great heights. We have also seen 21,600 or thereabouts on the Nifty spot, 71,500, 71,600 on the Sensex. Stock specific, some good moves. This week is going to be truncated. Yesterday we had an off on, we'll have the F&O expiry on Thursday, possibly last 4 days of this calendar year of trading left. Maybe a little bit of choppy and volatility, but I think let's give it to the market, Suyash. We have gained a great momentum, especially in the last month or two, and I think a quiet goodbye to the year 2023 from the markets is what I expect, at least. No major fireworks. In keeping in mind the F&O expiry, there will be choppiness and volatility on Wednesday and Thursday as we approach the F&O expiry. But as I have been recommending, as I have been advising, since we started interaction on this channel. All dips are going to be great opportunity to buying into. Starting Jan 24, second week onwards, we will have a curtain raiser for the third quarter earnings. And our anticipation is that the third quarter earnings should be better in color and shade compared to what we've seen second and first quarters.
Keeping it with the December quarter earnings season, sir, I mean, what are your broader expectations, especially in regards to the demand? Because, the demand had been lacking at the bottom of the pyramid from the rural segment. Do you expect a revival in that or some sort of a turnaround over there because of the festive season?
So firstly, I think I always believed in one thing, Suyash, is that India was, is and will remain a consumption-driven story. With a huge population, you have a sizable amount of population, of young population, point number one. Point number two, large part of this population is associated with agri activities. We had erratic monsoon this year. There is no doubt about it. In some places there was excess, some states there was excess, in some states there was deficit. Some kind of pull back from the bottom of the pyramid consumer base was likely to happen. There was no denying, but it is not as significant as one would have thought it would have been, because numbers speak for itself. And my sense is that compared to the second quarter, third quarter for FMCG sector is going to be a little bit better in terms of volume growth, in terms of input cost coming down. And of course, the rural, semi-urban and rural India, I would like to club both, will start showing signs of improvement in terms of consumption. So that should add to the earnings of FMCG company.
All right. And so hold that thought because we have the listing numbers of the three major companies that have debuted on the bourses. Now, Motisons Jewellers has in fact listed at a premium of about 90% at 104 rupees per share versus the issue price of about 55. Muthooth Microfin and Suraj Estate on the other hand have listed at a discount of about 5% or so. Suraj Estate has listed at a discount of 4.44% at 344 per share versus the issue price of 360 rupees. Muthooth Microfin on the other hand has listed at 278 per share versus the issue price of 291. Now, sir, I mean, specifically I want to talk to you about this jewelry stock and the kind of rally that we have seen. In fact, Senco made a stellar debut. It listed at a premium of about 36%. Vaibhav Gems and Jewellers, although it had a muted listing, the stock has rallied about 60% since then. And now today with Motisons Jewellers. What's your take on this jewelry segment? Is that a theme that one can explore?
So, as a brokerage house, Suyash, when it comes to portfolio building, we always advise our clients to have a diversified portfolio. And possibly depending upon your age and your expectation of return and your risk appetite. For example, if you have say 100% to invest, maybe a large part of should go to equity related, whether mutual fund or direct, depends upon your capability and capacity. Some should go towards life insurance, FDs, PPF, land if you have a large corpus, and along with that, at least 15 to 20% towards gold related asset classes. That can be in form of physical gold, that can be in form of gold ETFs or gold sovereign bonds. Our bias in this particular sector, gems and jewelry, if you will, is tilted towards one and only company which is the strongest in this sector, and that is Titan Company. This company has got gems and jewelry. Large part of contribution comes from the wrist watch segment. It has got eye care. It has got other accessory business which is doing well. It acquired Carrot Lane some time back, which has added value to the entire product profile going forward from here on. And I would say that if you want to go into gems and jewelry, stick with the best in the sector, and that is Titan Company.
All right, stick with the best, that is Titan. Now, sir, another big debut, Muthooth Microfin. Now, you had advised subscribing to that issue on the show. That has listed at a discount of about 5% or so. So, opportunity there for investors?
Yeah, so I am not a great person to ask in terms of listing gains, Suyash. Yeah, but on the fundamental side, our company Geojit Financial Services had come out with a subscribe from a long-term point of view on Muthooth. And since it has got listed at a discount, I think those who don't have any time limitation and is willing to commit long-term investment, I think it will be a great investment.
All right, now, sir, we are in the final week of 2023. It has been a good year for equities so far. And I mean, anything in particular that you are concerned about stepping into 2024?
Yeah, the big event is in form of general elections, Suyash.
Right.
But the recently concluded state election and the outcome of that is something to go by. Then possibly some part of that question mark is answered. Let's wait and watch what happens as and when we approach the general election. Other than that, I think budget is going to be on account. It's going to be a formality given the code of conduct that will come into effect. So I don't think we can expect much from the finance minister, Srimati Nirmala Sitharamanji. Earnings is something that we'll be watching out for. The unknown factor that we don't know of and that we will react as and when it unfolds are two things, Suyash. One is geopolitical uncertainty, and the second one is any kind of natural disaster or calamity. I think these are the two unknown factors which we don't have an answer to, and we'll react as and when we have such events unfold. Let's pray to God that it doesn't. But in today's world, to take anything for granted is a little bit difficult. But when it comes to growth story as far as India is concerned in terms of stock market and GDP and governance, I think all boxes are ticked.
All right, sir. And COVID cases are once again on the rise. Is that a threat that we need to watch out for?
I think we have to be a little bit cautious in terms of using any kind of terminology with respect to the VH.1, if I'm not mistaken, is the new variant. Government Health Ministry advisors have not raised any kind of serious concern or an alarm. And let's hope that this too passes by without creating any kind of collateral damage. But one needs to be careful. I would not say worried or I panic. I don't think I would use those kind of words or terminologies. I think being careful is always advisable.
Now, sir, we have been talking about, the IT sector, and you for one have been quite bullish on it. But, earlier this morning, we heard a news of Infosys that lost a $1.5 billion contract. And as a result, we have seen, quite a bit of correction set in for these IT stocks. Now, this termination of contract, do you think it's a one-off thing, company specific, or is that a trend that we need to be cautious about?
So in life, there is no win-win situation, Suyash. You win some, you lose some, right?
Right, sir.
So, I mean, I would not read too much into it as a disclosure. Like you rightly mentioned, as a brokerage house, we at Geojit Financial Services Limited have been positive on IT, even when the going was very tough, not only in the beginning of this financial year, but even last financial year, if you go to see, a lot of apprehensions were there. We remained optimistic then, we remain optimistic now. We will remain optimistic going forward from here on, and I don't think there's going to be any serious damage as far as this pull back of deal is concerned. Knee-jerk reaction is always there in the stock market, Suyash, but notwithstanding the short to medium term volatility or ups and downs, I think long term it still remains an investment idea.
All right, sir. And probably since we are seeing you the last time in 2023, any top 5, top 3, top 4 recommendations, stock recommendation for our viewers, sir, for 2024?
So first of all, let me wish you, your entire team, your viewers a very happy, prosperous New Year 2024.
Same to you, sir.
Season's greetings to all of you all. Top 3 sectors. Well, I'll mention top 3 here. Okay, so defense, power generation, power sector includes three. So along with defense, you have power generation, transmission, distribution, and power equipment, railways, banking and finance, and if I have to pick the fifth one, then that would be auto.
All right, that's Mr. Gaurang Shah for you, sir. Thank you for joining us here on First Stick. Very happy New Year to you and your family and everyone at GeoJet. See you on the other side in 2024, sir.
Thank you.
But let's also take a look at how the markets are holding up, and we are seeing quite a good bit of recovery for the Nifty. In fact, Nifty has, as we speak, reclaimed the 21,400 mark, and if you can pull up the numbers, Nifty currently is up about 50-60 points or so, sitting just above the 21,400 sort of levels, and Sensex has also reclaimed 71,000 mark, which it did earlier in the morning. As you can see, these are the numbers from 10 a.m. We are seeing a bit of a spike. The markets, as we know, are quite volatile and are expected to be quite volatile, given that the volumes are thin because institutional activity is missing since they are on a holiday, and the numbers are updated, and Sensex, as you can see, is up about 100 points or so, and at 71,276 levels, making way towards 71,300 mark. The broader markets, now that is something that we need to talk about and elaborate more on, because the two indices, the small cap and the mid cap indices, have seen a tremendous recovery. Now they, for the majority of the year, were the outperformers. They have in fact beaten the returns of both Sensex and Nifty. But in December we were seeing some bit of a choppiness set in, and headliners, as a matter of fact, had pretty much surpassed the returns of the broader markets. Nifty, for instance, is up about 6% or so in December alone, whereas the mid cap and the small cap indices are up 4 to 5% or so. But this morning, pretty much we have recovered what was lost in the Wednesday shakeout. Both indices are up about 0.87% or so. As you can see on your screen, Nifty mid cap 100 is inching towards 45,500, and on the small cap index we are just about 100 points shy of that 15,000 mark. But keep an eye out for volatility, as India VIX has seen a sharp spike of about 7.5%, making way towards the 15 mark. So that is something that we need to be cautious about. But with that, it's a wrap on this edition of First Stick. But stay tuned with us, as we'll be back with Business Plus on the other side.
This was intended to be a terrorist spectacular without precedent.
The plan was to bomb 2 Air India passenger aircrafts simultaneously.
There was a loud explosion and the whole plane just vanished.
The police dropped the ball, the intelligence officers dropped the ball, and the politicians dropped the ball.
It was a conspiracy that destroyed my life. It destroyed 331 lives.
News is now content. Just stream it. Download the world's first news OTT, News9 Plus, ahead of the curve.